In this section, let us talk about credit policy. Every bank will have a mission like achieving excellence in customer service, achieving shareholder satisfaction, stakeholder satisfaction, employee satisfaction. In order to achieve this, bank's board will come out with a policy known as credit policy, right? So why this credit policy is required? If you look at the activities of bank, it will have processes like sanctioning, issuing, collecting, okay, various types of loans and advances. Broadly, we can say different types of credits like cash credit, overdraft, demand loan, term loan, bills purchased, discounted, then letter of credit, bank guarantee. And all these credit facilities will be generally delivered by branch, and nowadays we also have other channels, right? Apart from that, if you look at the customer base also, it will be different. There can be individuals, there can be partnership, there can be companies, and all these customers will be of varied size and they'll be in different geographies. And within the bank itself, this credit function will be handled by number of officials. So all the officers and departments within the bank should follow same guidelines, uniform guidelines. Only then they will be able to take correct decisions. Bank should also comply with regulatory standards. Then the officers department should ensure that they are complying with internally set risk profile. Bank should maintain quality of its credit portfolio. Bank should remain profitable. That's more important. And for all this, well written credit policy is must. Okay. So what is credit policy? Credit policy is a document which will specify the guidelines for all types of credit decisions, and it is the credit policy which will determine the composition and overall credit portfolio of a bank. So it is a responsibility of the credit officers and management to follow credit policy, right? Okay. Then what is the objective of credit policy? The objective of credit policy is to maintain a healthy balance between the credit volumes and earnings and asset quality. If too much of credit volume is added, then it is possible that earnings will go down, okay, because there can be a risk of bad debts and all. Asset quality may deteriorate. So the objective of credit policy is to maintain healthy balance between the credit volume and earnings and asset quality, and all this should happen within the regulatory framework, corporate goals and social responsibilities. Okay, so by having credit policy, credit expansion can be ensured in a steady, sustained and prudent way, and this will enable good earnings, steady rise in profits and close watch on asset quality.